that escalated rather quickly. Obviously, the markets just have a rip your face off reaction to the State of the Union last night. I got to be honest with you, I watched the same thing the market watched. Um, I wouldn't say necessarily knocked the cover off the ball. He said everything he has been saying, but with less fiery rhetoric. So I guess the market's taking that as bullish. It marks a shift in tone. And I got to be honest with you, talking to a lot of his supporters, being one of his supporters, I don't like necessarily a shift in tone. I get it, man. It's the State of the Union. You want to look presidential and quack, quack, quack. The edges of the president's most incendiary rhetoric were sanded off, even as he made no policy changes. Um, okay. So the market's bullish and going up on him saying what he's going to do, but just a little nicer. Got it. So we've been right about the underpinnings of this economy and his words being great. Here was the hope rally. We leveled off, and then this was the change. The guy said he was doing what he was going to do. We leveled off to go into the State of the Union, and now he said again what he's going to do. He faces a lot of headwinds, right? What's his name? Paul Ryan sitting behind him on the chair there. He's got to get moving. Mitch McConnell's got to get moving. So GOP, great subheadline, GOP infighting and Democratic opposition awaits the president's wish list. Yeah. So I got to be honest with you, when watching Futures last night, and I'm like, I don't see this. I think this is a knee-jerk reaction, and we are, if you thought we were way overbought here, we're extremely overbought here. This rally has been pulled way forward, and if there is one hint that this guy isn't going to get something done or something's not going to pass or it's really getting slower, we will implode. Okay? Yeah, he talked about infrastructure and $1 trillion investment and all this stuff. But yeah, $1 trillion investment. Here's a legislative reality. Like the border wall, any major spending on infrastructure needs to get through Congress, folks. And there's a lot of folks to the right of Trump, a hell of a lot to the right of Trump, who are like, hey man, we ain't spending a dime unless that dime's taken care of somewhere else. So he could talk a lot of platitudes, folks. I get it, but you really need to understand that welcome to Washington essentially is what I'm saying. So again, I thought this would be a sell on the news because he wasn't going to say anything different, and I got the exact opposite reaction. I'll be the first to admit when I'm wrong. Man, got that one wrong. I'm not in the SPX, was it 2380, 2385 bear call spread. So obviously that's looking a little in danger right now. Remember, it's Wednesday. There's a world of time between now and what? Friday. I'm not necessarily saying hold it. Obviously blew through an eject level, and most people would probably want to eject out of that thing today. But if it is kind of looking at max loss, I mean, what the SPX settles in cash. There's no risk of assignment. I got to tell you, man, the rest of today, Thursday and Friday could, this is just big, man. I'm just sitting here shaking my head a little bit. Like, not too many people saw that coming. Everything else is looking great. Our JP Morgan positions, I'm getting ready to do accelerated retirement. This one's up $24,000, this JP Morgan position. And the newer one that I just put on a month or two ago is up $1,800. So a lot of greens, and that's great. All of our Facebook positions are looking great. Our bull put spread on Facebook that we put on 2 weeks ago is up $2,100. So everything's good, but I got to tell you, man, when a guy like me tells you something's a little too good to be true, it usually is. Okay. Talked about AIG yesterday and the board of directors trying to figure out what's going to go over with Hancock. I think he's going to get clipped. More on that to come. But we put on a bear call spread yesterday in the primary live trade brief, which of course is red today. Anything bearish today is red. But we're at new all-time highs again, guys. If any huge money manager, or even me as a portfolio manager, looking to deploy capital at these hypoxic altitudes, man, you got to sit on your hands a little bit, especially on a day like today, and go, let's evaluate. Let's see if the market really holds on to this, and then we go higher. I predict and we go higher. The only thing that's going to bring us down is a Trump. He ain't going to get this stuff done, or something goes bump in the night in the South China Sea, North Korea fires off a bottle rocket, or Putin does something. Other than that, man, we're up, unless he can't get it done, folks. we're going to have to stay on this like white on rice, man, because at the first sign that things ain't going to happen, that this rally is built on, look out below. And then we're going to get ready to hedge, and we'll pound this market into the dirt with bearish double verticals, okay? So I got to get going. I got to get airborne in our accelerated retirement brief. So happy hunting. Make sure you hedge. And I'll be back with Thursday's market SITREP tomorrow. We'll see you.